Hello, everyone. Welcome into the Beyond Compliance webinar. We're going to get started here in just a couple of minutes. So as everyone starts to roll in, please let us know where you're coming in from. Go ahead and drop in the chat where you're coming from, what your name is, what your organization is, what you do. We're going to get started here in just a couple of minutes at exactly 10 a.m. Pacific, 1 p.m. Eastern. And then during the webinar, we encourage you to drop any questions or comments in the chat as well. There's going to be time at the end for a live Q&A session with our panelists. So please go ahead and do so. Add any questions you have, and we'll be sure to answer those. We'll be having our panelists come on here really soon. If you have any questions directly for them, again, please drop those in the chat. During the webinar, we will also be having some polling questions that will come up. There will be a QR code, but we will also be putting a link in the chat as well. So please be sure to voice your opinions as those polling questions come up. All righty. Well, with that said, let's kick off the show. Welcome everybody to Beyond Compliance, how real-time, real-world insight delivers BAV solutions for uncertain times. This is a seminar that's hosted by Nacha and Accelitas. My name is Sabrina Corey, and I work as part of the marketing team here at Accelitas. Joining us today are participants from both organizations, Nacha and Accelitas, and we're excited to have these really great panelists join us today. We have James Cook and Steve Crozet from Accelitas, and then we have Amy Morris joining us from Nacha's organization on the panel. Today, they will be engaging in some lively conversation about bank account validation and the discussion revolving around compliance. If you have any questions or comments that come up during the presentation, please be sure to drop those in the chat, especially as it pertains to this topic of bank account validation and compliance. During so, we'll also be having some polling questions during the presentation, and there will be a QR code on the screen with a link to the poll, but I'll also drop a link in the chat as well for those polling questions. With that being said, I'm going to hand it over to our panelists to start the show.
Well, thanks, Sabrina. Hello, everyone, and thanks again for joining us today. It's been over a year now since the Nacha web debit rule went into place. So what we wanted to do is take a look back and see what we've learned in that time period and what are we seeing in the marketplace today. There's a lot of volatility right now in the economy. Are we in a recession? Are we not in a recession? We know inflation and interest rates are all going up. So what is it that companies can do to evolve and adapt to these uncertainties is what we want to investigate today. Next. So our agenda, we'll do some quick introductions of our panelists here. We will talk about what Nacha is seeing from the web debit rule a year in and other areas that they're looking at. We'll talk about some key challenges that we have seen in the marketplace and that our customers are describing to us in the marketplace. And then we'll go away and look at some ways to address some of these challenges. As Sabrina had mentioned, we'll have a Q&A session at the end. So if anybody has got questions, please put them in the chat and we'll address everything with time remaining or get answers back to you if we run out of time. And what we're hoping you'll get some takeaways from this discussion here is, with an uncertain economy, there's definitely challenges and opportunities for folks to address. validation systems have certain limitations for their users, so we'll look at some of that. We'll look at how predictive analytics and some real-time bank account activity can help folks optimize their bank account validations, and just some key steps that folks can do to keep their bank account validation aligned within a changing marketplace. So I'm James Cook. I head up the product efforts here at Accelitas. Been here for about 2.5 years now. Worked in product management throughout my career. And the product management area really deals with a lot of different departments throughout an organization. And so you get a lot of feedback and contributions from these different groups within the organization. Folks like to weigh in on what are we going to name the product, pricing, feature, functionality. We definitely encourage the inputs, but hence my quote here, I believe there's a product manager inside of every one of us. Steve, would you like to introduce yourself?
Yeah, so I'm the CTO and I had the data science team here at Accelitas. Been here for quite a while, and my team's responsible for a lot of the stuff, the background algorithms that go into the bank account validation services that we'll be talking about here. We've had a lot of experience with data, and then also trying to solve some of the problems that we're trying to address here.
So for those of us who don't know Accelitas yet, we're a data analytics company headquartered in the San Francisco Bay Area. We leverage several alternative data sources to help our consumer lending customers with their lead screening and their loan underwriting activities. We're also a very proud Nacha Preferred Partner, and we help out in various markets with bank account validation use cases. And of course, bank account validation is the focus of our discussion today. And I am very happy to introduce our featured guest today from Nacha, Amy Morris, Senior Director of ACH Network Rules. Amy, I'll hand it over to you.
Thank you so much. I'm very happy to be here with all of you today. So my name is Amy Morris. I do work in the rules department at Nacha, which means that along with our rulemaking process through our members and the public processes that we have, I also provide education. I also am the liaison to the various member groups in Nacha, where we work with the service providers as well as the end user. So my quote here being payments are personal. That's something I took from an old boss of mine many years ago and has served me well, especially during my years as a system designer and a program manager, that there are so many different reasons why people choose to make the payment in the manner that they're making it, and we're never going to always be able to understand that. And so it's really important, to be diverse when you think of, what's needed in a payment system, or even, in a checkout. It goes beyond just what you can imagine. So with that, I'll go ahead and jump into just a little bit about what we're seeing in the network overall. So things have changed this year as compared to 2021. Volume on the ACH network does continue to grow, but it is at a slower pace than we saw the last couple of years. So on the sides of the slide are information from our infographics on third quarter data. And then in the center is a bit of information with some analysis to it on the first half of the year. So at the midpoint, we were up, just shy of 3%. Excuse me. And the year before, the network overall was running at about 8% growth. So we are seeing the rate of growth start to slow. We are seeing business to business payments continue to rise. As we know, a lot of organizations took advantage of the timing of the pandemic to convert over to electronic from paper. So those numbers are reflected both in the first half numbers as well as what we're seeing in same day ACH. So when you look at the third quarter for same day ACH, the value increased 103%. That's because earlier this year we raised the per transaction amount allowed for same day ACH up to a million per transaction from 100,000. And so we have seen that folks have been taking advantage of this since we've implemented. So for the full second and third quarter. And that's primarily because of the growth in B2B payments. There's, I wish there were, but there's not a lot of consumer payments between the 100,000 and the $1 million mark there. Um, and then those online consumer payments, that's primarily what, kicked off the conversation around account validation. Those are those web debits. They're continuing to grow very strong as well. So consumer behavior, continuing to stay strong there in terms of the way they're choosing to make payments, perhaps in a less face-to-face environment. Direct deposit. So we call direct deposit by that name, but it really is any credit going from an organization to a consumer. Down in the numbers, but up in the amount. So fewer payments, but for more money. So we're going to be continuing to watch that, this year, and really see what that means. And then the last thing we call out here is check conversion. Our check conversion, we allow for certain checks to be converted to ACH transactions and cleared through our network. That volume obviously is small and it has been getting smaller and smaller. But what is very interesting is the dollar amounts are growing. And so we have been hearing, perhaps there's been an increase in fraud going on the check side. And so we need to maintain our vigilance and our risk management on the ACH side to make sure that we're not seeing that infiltrate as well. So with that, we can go ahead on to the next slide and talk more specifically about account validation. So this is just a quick reminder. There's different flavors. So what I'm calling basic account validation is pretty much just what is required under the Nacha web debit rule, which is that you're checking that the account is open and that it is valid for the transaction type. If you're doing ACH, then specifically it's valid for ACH. And the rule is neutral in terms of the methods. There's lots of different things that are out there that do basic account validation, such as the pre-note entry through the ACH network, micro entries, which I'm going to talk a little bit more about. And then there's, those things are not instantaneous. So that's one drawback there. Then that we have vendor enabled systems that can take on different flavors as well, but that are going to provide instantaneous results. And then we have the advanced flavor. So we're going to continue to talk about what's required under the rule and then also best practices. So there are additional layers of service beyond just basic requirements that we would consider best practices and that are available out in the industry, especially when we're talking about verifying account ownership, and then even further than that, learning about behaviors and other histories on the account, and again, may require some consent there, but there's a significant amount of additional information available beyond just basic account validation. So on the next slide, we sort of talk about, like I said, the rules and the best practices. So where we got started was the Nacha web debit, and excuse me. As was mentioned, the rule itself went in March of 21. We began enforcing it in March of this year, and so the web debit rule basically says that whenever there is a debit to a consumer's account from an organization, and that debit was authorized over the internet or some kind of unsecured network, so that can also be text, or other types of apps or mobile devices, that is considered a web debit. When a web debit, the account number that is being used is the first time you've seen that account number for that customer, then the rule requires that that account number be validated using a commercially reasonable system before that other transaction would be initiated. So are we having a little bit of an issue with the slides here? There we go. Thank you. So that is the center green part on the slide. And this is required under the rule. Sort of what I just explained, I like to break down into a nice little equation there. If it's the first use of an account and it's resulting in a web debit, then it must equal account validation. So we have the requirement for consumer debit entries that are authorized over the internet or some fashion similarly. But we also have best practices and a couple of different things that I'm calling out here on the slide. For some time, we've had a white paper out on account validation, and we've called out these different types of transactions as best practices would be to implement account validation and account verification. So for consumer transactions, direct deposit, definitely account funding, P2P transactions, rebates, refunds. Notice that we're talking about debits and credits. So the rule requires those consumer debits, but best practices go far beyond. There are other types of consumer debits, point of sale, enrollment types of transactions. And then, certainly on the B2B side as well, when you've got, um, payroll processing or any other type of third party processing where you've got money collections going to fund other things. It's important to know that the money is going to get to the right place expeditiously, and account validation can really assist with that. We also know that for payroll funding and expedited payments, knowing that you're going to have that good account number up front can help you make your decisions better as well. And then on the far left hand side of the screen is something that Nacha has just released. It's a paper thus far about risk management and in the era of credit push fraud. And so one of the things you'll see, there's a number of suggestions that will come out of this. But one of the things that is specifically called out is the use of account validation and additional tools on credit transactions, not just the rule required debits. So going on to our next slide, one of the things that has happened since the rule was implemented was seen an increase in the use of micro entries. Some people know these as test transactions, penny tests. They've had a lot of different names because they've been around for a long time. The fact that we have now defined them under the rules really is more of a reflection of their gained prevalence. Again, because they've been around. And so these rules are not really meant to change processes. But because there was an increase in the number of micro entries flowing through the network, we had to standardize them. So, part of this rule has already been implemented in September of this year, which, if an originator is choosing to use micro entries for their any account validation, whether it's their web debit or any account validation process, they must abide by these new rules. And so the first part that went in September had to do with formatting. There's a standardized description, and there are requirements for making sure the company name is clear. There's also origination practices on the use of debits and credits and how those must be submitted together. And that debits can't outnumber or in terms of value the credits. Phase 2 is coming in March, and that's going to require originators of micro entries to use commercially reasonable fraud detection, which means that they will need to have a way to monitor the forward and return volumes of those micro entries and recognize suspicious activity and have policies and procedures to be able to act on and remedy whatever might be causing those spikes in volume. So we continue to have more changes coming. And then some in the conversations that I have had with folks, that have called up that have had questions about the rule. We're trying to go through our implementation, or we've been through our implementation. Really, what I've heard a lot of is from our perspective that um, thing there's not a one size fits all solution out there, and that was something that not everybody really was clear on. And so sometimes the larger companies, they would like to get more out of their account validation than they're getting, and some of the smaller companies are like, oh goodness, this is way too much, this isn't what I needed, or it's not being tailored to me. So James, that's really, what's been happening at Nacha in the last, year and a half, when it comes to account validation.
Thanks, Amy. Thanks for those insights. What we've got listed here are a handful of challenges that we've been hearing from our customers and we're seeing in the marketplace. Amy touched on some of these as well. So number one, no surprise, there's no single silver bullet solution where you can set it and forget it, right? There rarely is. Coverage becomes an issue with many solutions, right? What do I do with the transactions that kind of fall out from my current BAV approach? We know things are changing in the economy, so what do I do to keep up with the uncertainty? And then interestingly enough, this fourth point here, we're hearing companies that aren't really measuring their BAV performance today. So if you're not measuring something, it's really difficult to improve upon it. And so that leads us to our first polling question. And again, there's a QR code here that you can access. I believe there's also a link in the chat that you can access. But the question there being, what is your biggest challenge in implementing bank account validation? I'm hoping everybody on the call has implemented their bank account validation for web debit rules and maybe beyond for best practices. But we'll give you a second here to answer. This looks like, we got some more pieces coming in here. Not sure if folks have had a challenge accessing the poll or not, but it seems like ease of implementation has a slim lead over coverage, price, cost, of the service, etc. So that's interesting. We want to move on to the so the first item that we had up there, challenge number one, right? No one size fits all. We found that the customers who are having the most success in this area here have been able to choose the right bank account validation service based upon the risk level of the use case that they're trying to solve, right? So, folks who are kind of on the less risky side, maybe you're doing a utility company and you're doing some monthly bill payment type of activity, the real-time account formatting validation, that might suffice, just using a couple of these items listed at the bottom of the screen on the left here, maybe all you really need in order to solve that problem. Whereas entities that have, more risk in their use case, whether it's a web debit or money transfer or remittance activity, probably going to want to do a more detailed analysis of the bank account. And so you might be looking at multiple or all of these type of items in your analysis to try to make sure you're comfortable with the bank account that you're remitting to. Next slide. So let's get a little oriented to this graph. There's a lot on here. What we're looking at here is the trade-offs among friction on the vertical axis, cost on the horizontal axis, and then there's coverage on the diagonal axis. And notice at the top of the vertical axis, we actually start at the top with low friction, and then as we come down to high friction. And on the horizontal axis, we actually start at high cost on the left and go over to lower costs on the right. The coverage grows as you go up to the right on the diagonal axis there. So I wanted to get us oriented to this slide, or let's go back. We're still on this slide. So yeah, I wanted to get folks oriented to this because we'll see it again later in the presentation. And so what's this telling us, right? If you look at the outer band, we've got some very strong coverage that can be attained, low cost, low friction, using non-credentialed services that rely on, payment data activity. When you move down the coverage diagonal access, the major consortium bank account data, very solid coverage for those who have access to it. We've been hearing from some that it can be a little costly for some to utilize that information. Going further down the diagonal there, the credentialing bank services, right? Hearing a lot about this in the marketplace now. They can be very effective, but they still have to deal with some abandonment, right? And this is now where consumers, some are not comfortable sharing their bank login information. And so friction comes into play here. And so once again, what do I do with the fallout of people who don't want to give their bank login information in order for me to verify their bank account information? And finally, down in the bottom left, the manual approaches. Amy had mentioned the micro entries that she discussed earlier. There's some other kind of manual approaches that folks have historically taken. A lot of friction that comes into these solutions here. It can take a lot of time, maybe some days before you're able to validate the results. And then there's always the concern around the indirect costs. If my employees are manually trying to deal with some of these solutions, how much is it really costing my organization for folks to manually be trying to keep up with these things? So as we go to the next several slides, Steve's going to walk us through kind of what he and team have been seeing in the changing marketplace.
All right, thanks, James. So first, I wanted to give an example about the dynamics around bank account validation. This is a simple example that just looks at institutions that come and go over time. So what I showed here was about over the past year and a half, how many institutions get removed and added per week. So on average, we saw about this number's been shrinking. So about over time, we see 4 institutions on average removed and 1 added per week. And what does this have to do with bank account validation is, and what I see from a data science side of things is those orange are going to be false accepts. So if you have a service that's not continuously updated, you might let one of these pass through your bank account validation system from an institution that has been removed. And conversely, for the blue, those could be false accepts. So a false reject. So something that you might have previously rejected because you were unknown about this institution that just has been recently added. So what this kind of highlights is the necessity for continuously updated data and being able to hit that in real time for an account validation service. On the next slide here, along with that constantly changing institution and bank account data, you have the type of errors that you're encountering will also change over time. So what I'm showing here, and then it also depends on the use case. So on this use case, I used an example use case of lending here. And what I did was I broke it out into the most prominent failure codes that were encountered, and then I broke that down per quarter. So what we have is in blue, there's insufficient funds. Orange is unable to locate the account. Green is account closed. Red is an invalid account number, and then the purple is a stop payment. And so breaking down by quarter, you can notice some interesting trends where the insufficient funds grew, kind of maxed out during the pandemic and has been bouncing around ever since. And then the other interesting part of it, where if you look into more of the hard Nacha codes, excluding insufficient funds, the biggest one would be problems with the account number itself, either unable to locate the account or an invalid account number. We're taking about 20% of all your error codes, but make up about over 50% of your hard Nacha failures. So, and then you kind of go down to payment account close, where about 5% of the failures, and then payment stopped, or even further. So why this is relevant is you have the ability to choose a bank verification solution that will target these type of errors. And you kind of need to balance what errors you're targeting, the cost, and kind of some of what James covered earlier in that chart. So that's what I'll hit next. So now we kind of layered in the solutions on top of this chart to kind of give you an idea of what the solutions do, what errors they cover, and then kind of bring it back to friction and cost and coverage. So starting at the top right, you can do the simple format validation checks, like looking at the routing number, looking at the account number. Routing number is very strict in terms of the structure, so you can have very, very high coverage. Account number is less strict, but you can do some statistical analysis on it to make sure that it looks legit. And what those will cover is they'll cover the orange and red errors that we saw before, where you're hitting R3 or R4 codes, which might take care of a big portion of your hard Nacha failures that you're looking to address. Going down further, if you look at ACH payment history, not only will you know that the account is valid, you can get some insight into the ability to pay. So looking at R1 errors, you get some estimation of if the account's open or closed or not, although it's always not exact for this type of payment history. And then also you can get some insight into the stop payment. So it kind of covers all of them. But it doesn't get all of them as accurate as something like a database lookup, which will be next, where you'll know for sure at that point in time is the account open or account closed. And then finally, if you want to address kind of all the above, you'll do something like funds verification, where you know everything about the account and then the activity. Do they have the ability to make the payments that you're looking for? But as you go through, you're kind of running into more and more friction and lower coverage. So, what we've seen a lot of people doing is stacking these on top of each other. So on the next slide, we talk about, making these as like a waterfall. And this waterfall, we stack them in a way that'll minimize cost as you go through. So starting at the cheapest, and you have highest coverage, where you'll start something like format validation, look at statistical analysis about the account number, ACH transactions, looking up the account, and then the bottom is the credential service. And what we've seen, it doesn't necessarily work this way. A lot of customers, after the year or so of having the Nacha rule in place, started with something like account lookup. So hitting in consortium data, getting good information about the accounts, but then they have this big hole and they need to find out what to do with the hole where they have no data on it. So a lot of scenarios that we've dealt with over the past year is they just move back up in the waterfall. So they'll start with account lookup, and then what they have for those no hits, they'll look into ACH transaction history or some even statistical analysis and formatting on those no hits, so they can fill in that 20 to 30% gap that these higher friction, lower coverage services use. So next, I'll send it back over to James so he can talk a little about measurement.
Yeah, so this is an interesting quote here we actually had with one of our prospects that we were working with recently when we were analyzing their data and helping them to figure out kind of how they were performing today and how our solutions might be able to help them. The gentleman said that he had no idea that they were rejecting 12% of their prospects, right? And so, once again, if you're not measuring something or paying attention to it, you're not going to be able to improve it. And that leads us to our next polling question, right? Again, QR code, and there should be a link in the chat. Are you currently measuring your account validation performance? So we'll give folks a couple of seconds here to answer the poll and see how the results come in from that. So it looks like a pretty strong yes, which is great. If our prospect that we were talking to is on the webinar today, then hopefully that means that he or she is now measuring their BAV performance. So that's great that folks are all measuring this piece. Oh, there's one that's a no. So yeah, some more no's coming in here on the poll here. Which is somewhat understanding if folks have just recently implemented solutions, et cetera. But going to the next slide here. So continuous optimization, right? As Steve was talking through the approach that we take, what we found that works best with our customers is, right, when they provide us some steady feedback from their various workflows, we've got the ability to tune and tailor our models. That helps them optimize their performance, right? And this enables our customers to better keep up with things that are changing in the market environment, right? So if you're not already, measuring your BAV performance, we strongly recommend that you should. And then consider, working with your BAV vendors to try to understand, how can you optimize stuff, right? Part of it is your workflow, because you always want to lower your costs. but probably as important, you want to lower that friction level, right, to improve the consumer experience for your customers, right? So, 12% dropping off because you weren't able to find them doesn't sound like a very encouraging consumer experience, for sure.
And James, I'll just jump in from the Nacha perspective and say that we hear about this as well. We hear about it from the receiving financial institution calls us up and says, "Hey, our customers are telling us that they can't get payments through because our routing number is new." So exactly, it does happen. So this is very important, and so over the last year, those calls have been
Going
increasing.
up. Yeah, as people are using
Hmm.
validation services and they're running into these roadblocks. So yeah, makes sense. Thanks, Amy. So just to wrap up here in summary, right, for those, again, that are not familiar with Accelitas, right, it's our combination of the access to these alternative data sources and our customized predictive analytics that's really enabled our customers to be successful with whatever business pain points they're trying to solve, that we can help them solve, and including bank account validation, which is what we discussed today. So we've got some time here if we want to move on to any questions that have come in from the team. I will say, if any of you in the audience here want to talk to Accelitas further, Jimmy Williams on the slide here heads up our sales organization, and his contact information is here, his email address and phone. I know he and his team would love to be able to help folks if they've got some questions to better understand kind of what it is we're doing and how we've been successful and our customers have been successful with the approach we take around BAV. So, Sabrina, if you've got some questions that have come through from the audience.
Yeah, so we have, audiences tuning in on Facebook, LinkedIn, and YouTube. So we do have a couple questions that came in here. I'll share this one from Avinash. Forgive me for mispronouncing your name if I did. The question here is, we are seeing less BAV hits due to non-participant banks without current vendors. So we end up accepting such bank accounts. Are you getting similar feedback from different merchants? I think that's a little bit more directed towards Amy.
So, the way I would understand the question, being that you have a vendor, but you're receiving a hit that says no information found, and so then you need to make a risk decision at that point. Am I going to accept this transaction? Yes, I think that has been a very common problem. We even addressed some of it in our FAQs with some ideas of different things that you can deal look at to make that risk decision. But I think also that's where, waterfall logic, whatever waterfall logic any vendor would have, but, as was discussed here, that's where that can, be very helpful. But I think it is, sort of the number one issue that, yes, I do hear about.
Yeah, again, ties into the one of the graphics we were looking at there as to, the coverage slide, right? Is that, there's different layers you can put in with different solutions in order to improve your coverage and your cost on that. And so, we know there's different providers out there that only have, a certain percentage of coverage, et cetera. So you're going to have fallout. So taking the waterfall approach, it's good to make sure you've got some other solutions layered in there, because you don't want to just blindly accept
Right.
or guess or default to a manual process, as some folks are defaulting to the manual process and just kind of gumming up your organization.
So, James, that's a good segue into the next question. And that question is, how difficult is it to implement a waterfall strategy?
Yeah, I mean, we found with our customers that easy implementation to a number of different of these API-based solutions here. Many institutions kind of have their own decisioning platforms, which allows them to go through the waterfall in order to call different sources, whether it's multiple sources from us or us and other sources, in order to do that decisioning piece. So I think the key there is to actually have a workflow waterfall type of platform that enables you to do that type of activity. I don't know, Steve, if you want to have anything to add from the folks that you deal with.
No, I mean, you covered it. So yeah, there's a couple ways where you can use kind of something like a decision engine waterfall service that'll do it for you, or you can just do it through our APIs instead of one API call that you're hitting some consortium data. You have some logic on your end where you'll fall back to some other services. So it shouldn't be hard either way.
Yeah.
And it looks like we have one more question. Again, if you have any other questions that come in, please put them in the chat or reach out to us after the webinar. I have one more right here that says, how do you test and measure performance?
So I can start with that. So, what we do is it depends on the use case. Most customers will try to minimize the hard notches that they're looking at. So like in the chart I showed before, we really focus on the ACH return codes. We look at those specific codes and look at which services are able to help you avoid those hard codes. So which services will let you avoid the R3, R4, R2, and so on. And then once you get that, you can get, how many false accepts is this service getting and how many false rejects is this service getting for me. And that's, as long as you have that level of data, then you can go to that point. I'm sure James might fill in on, beyond the data science side of it, there's kind of the more integration, the friction, and then the dropout rates too.
Yeah, and folks, look at the cost and what's the return on the different services that they're using as well, right? So that's another measure of performance. This service may be working really well for me, but it may be a little costly, and so maybe there's a way I can structure my waterfall such that I get, similar or better performance at a lower cost for my organization. And so, that's something to really take into consideration. I mean, part of what our solution can really help with is any type of fat fingering that a consumer may have, and you can knock those things out relatively inexpensive right at the top of the waterfall. And typically people are going to see, 2, 3, 5% type of their transactions that are just fat finger type of stuff. So you don't want to be spending time and money on those type of mistakes that may be coming through your workflow.
Thank you for that, James. Amy, can you talk to us a little bit more about the enforcement of the web debit rules?
Sure. So with the Nacha operating rules, they are enforced between financial institutions. So the first thing is there is no automated kind of enforcement. We're not monitoring, the return rates on web debit transactions any more than we normally do. But we're not looking for anything. This follows the standard enforcement process, which is one financial institution will contact Nacha saying, I think there's a potential for a rules violation on behalf of another financial institution. And then we will investigate. And there is a whole process that one goes through to investigate, get response, come up with a plan going forward, etc. But that happens, as I said, between financial institutions. So if you are a third party sender or you are a merchant or what we call an originator in the ACH network, um, your enforcement is actually going to be with your financial institution. So you have signed an ACH origination agreement with them. At a bare minimum, it says that you'll abide by all Notch operating rules. And then they are going to have other clauses in there that are going to let you know exactly what they would expect to see from you. So if there's any kind of, they want copies of your audits, they want to, know anything about your system, they want an attestation that you are compliant with this rule or that rule. All of that is going to be in that origination agreement. And then any breach of that. So if there were to be a situation where Nacha were to fine, that fine goes to the financial institution. So if the financial institution is going to pass any of that on, that's going to be within that ACH origination agreement. So again, Nacha works directly with the FIs. As a user of the network, you need to work with your financial institution and understand what's in that contract. And that's what enforcement looks like for you.
Great. Can you talk a little bit about why our coverage is better and discuss a little bit more about transactional retail data?
Yeah, so it really, again, gets back to our, the different alternative data sources that we have access to, right? And the information that they're seeing on ACH transactions. And so working with, many merchants out there, large, brand name merchants that are out there, we're seeing those ACH transactions and successful ACH payments being made, et cetera. And so all that data that we get to see on a, daily basis really makes for some robust signal for us to better understand the validity and the strength of the bank account that we're doing some analysis on.
Perfect. Steve, anything to add to that?
I guess just the only other thing would be the feedback we have. So James talked about the data, and then we also have a lot of measurements. So not only do we have a lot of data, we have the data behind the scenes to say which pieces of that information is important for validating bank accounts and in which situations is it important. So I think you need kind of both to play well in this area.
Perfect. Well, we're just about at time here. I want to thank you all just one more time for taking out the time to join our panel today. For all of the audience members and people who registered to the event, there will be a follow-up email that will be sent within a couple of days with a recording of the webinar. And please be sure to send us any feedback, send us any questions or comments. We do want to hear from you about any topics that you want us to explore in the future. And if you have anything directed towards the panelists, we'll go ahead and send any questions to them as well. And feel free to reach out to them on LinkedIn or via email. So once again, thank you all for your time. I appreciate you joining us today, Amy, Steve, and James, and we'll be seeing everyone again soon.
Thank you.
Yep. Thanks all. Happy Thanksgiving next week.
Thanks.
All righty. Take care.